Good morning and welcome to Friday. Yeah, I'm Joe Jaquint, CEO of the Patriot Trading Group, and yes, it's the best day of the week because, well, for I guess a few people, I don't even know, is working Monday through Friday. Is that the normal thing anymore? I don't know. Everyone's got part-time jobs, second jobs, third jobs. But, hey, if you're one of those where it's the last day of the week, congratulations. 800-951-0592, the website at allamericangold.com. And Jason, we've got wild market. Matter of fact, I'm probably more speechless today than I've been in all the previous days this week because it's been a very bizarre market. Right now, we got the Dow up 500 points. Now, we've seen this actually pretty much all week this week, and then by the close, it closes a little higher, but the NASDAQ and the S&P are lower, but today they're all up, yet the economic data was terrible. Amazon came out with earnings. Horrible. I don't know if you saw Jim Cramer practically crying on TV because he tells everyone to buy Facebook, Meta, whatever it is. Oh, I was wrong and this and that. If you want to see it, go out to our website. We've got the clip. It's pretty funny. And then we play a bunch of other stuff of all the other idiotic things. Be careful where you get your advice from. I'll just say that if it's coming off the TV, you probably want to go somewhere else. We had the Fed's favorite inflation data out today. No better, Jason. Matter of fact, just as bad as the last reading.
Yeah, that's not going away. We'll see. Like, the next few months will be interesting, Joe, because if for some reason they've capped it, if their inflation numbers kind of stay level, then we might actually see the rate hikes go away, Joe. But this just looks to me like what's getting ready to happen after these midterm elections is gas goes up, food is still going up. So the inflation's here, Joe. I think it's going to be here. I think it's going to run for a while. I mean, in the 1970s, I think there was a couple of times they thought it was going away, and it just kept coming back, right?
Yeah, it's not going away. Bank of America CEO Brian Moynihan was out today saying Fed funds rate at 5%. 5% by March. That's probably the best case scenario. So 5% would mean we're going to get 3 quarters Wednesday. This inflation number guarantees that. Then he's saying 50, 25, 25. So two rate hikes next year, both 25, 50 in December.
Well, he's more optimistic than I am.
I don't see that. Listen,
I don't see it either.
I think that's light.
Yes.
I think that's light. I wish I didn't, but I just everything that I see says inflation's not going away. The bond market continues to be a problem. The bond market early this morning got above 4, and then housing, existing home sales came out. This number, we were planning on it being bad. It was much, much worse. Month over month, 10% decline month over month. Like I said, listen, by January, we're going to have home sales down 50 to 70%. That doesn't bode well. And we know there's been layoffs in the mortgage industry. Zillow announced some more layoffs yesterday. But you got realtors. Realtors are kind of weird because, they're not like hourly type employees, so you don't really technically get laid off. But it's going to be a tough year for the housing market. AutoNation, they came out today and said that car sales have stopped. I rent out, and again, I know a lot of small business. Matter of fact, Jason and I, we were talking about it this morning. I actually lease out the back part of my shop to a small used car dealer. And they work on some cars there. They use it for storage, that kind of stuff. I talked to those guys yesterday, and they were mad. They were mad. And I'm sure this is probably anybody in housing probably feels the same way. He's like, why are they saying that the economy's so great? Why are they raising rates? Joe, how high are rates going to go? Don't they know it's a recession? That's how bad it is. And I get it, but you know what, Jason? Outside of probably those two areas, everybody else. So I've got guys that own bars, restaurants, catering companies. I have people that are in the hospitality, because, Phoenix is a touristy town, and he does, big, companies call up, hey, we want activities for 200 people and things like that. Jason, they're all still busy. Now, they all said the same thing. Hey, I'm not as busy, right? And I don't need more people anymore, but they're still busy.
Well, people are going to work because they have bills to pay, Joe, and to offset the story there in Arizona, we have an advertiser here at 1360 KHC. It's Ramsey Auto. They're a car dealership, but they specialize in work trucks, and they're busy. Guys needing a truck to go to work, Joe, and they're selling those things. But the local Toyota dealership is not doing well. So it's
and again, I'll just reiterate this to everybody. Rates are going much higher than they want to believe. And the reason is simple. The Fed's got two mandates: full employment, stable prices. We've got full employment. Matter of fact, according to their little metrics, somehow we got fuller employment than they think is possible. And yet we still have high inflation. We'll see. I think B of A's right. 5% is the best case scenario. I think it's going to be 6 or 7 before something breaks. We'll be back. 800-951-0592. Patriot Radio News Hour, Joe and Jason. And, we sell gold and silver, wealth insurance, real money, something that's been money for thousands of years. When we talk about fiat money, which is the system that we exist in today, we did not have that in America. Really, we had a couple of iterations early on, but until 1913, with the exception of about 40 years, our money was gold and silver. We became a superpower on gold and silver. Things that we're experiencing today did not and does not exist in a sound money system, which is what gold and silver is. And why, and this is the part I wish that, the professor, Glenn Biddle, he's a history teacher. He's on 1360 pretty regularly, but I wish they would teach the real history to kids so they could understand it better. But the realities are, Jason, is for most of that period where America really emerged as a superpower, we were on the gold standard. Gold and silver was the money. We never had inflation. Inflation essentially didn't exist, with one exception: war. When there was war, you would have inflation, which makes sense, right? Everybody can understand, okay, war, that means, first of all, we're going to send people to die, so you got worker shortages, you're going to have demand for certain metals that you normally wouldn't have to drive up cost. And then, of course, hey, the people we're warring were maybe they provided certain things that we didn't have. Now we're at war with them. You're not getting those things, so you'd have that inflation. But the second the war ended, everything went back to the original price. But with fiat money, that doesn't happen. And it wasn't that our founding fathers were geniuses. What people don't realize is one of the main drivers of our money system, that they wanted our money to be gold and silver, Jason, had to do with the scrip money that England put on the colonists, which led to the Boston Tea Party.
Yeah, correct. The War for Independence had very little to do about taxation. If you look at history, the taxes that the colonies bore in the 1700s, which far less than the taxes we pay today. The founding fathers would despise the amount of taxes we pay. So one of the things that England did to their colonies is they didn't let them have money. No copper coins, hardly. If there was any coins, there was a lot more copper. That they made it scarce silver coins and scarce for gold coins in the colonies. So when it came time to pay those taxes, they're like, well, since you don't have money to pay us for the taxes, we'll take half your field. We'll take half of what your output is in your mine. We'll take half of whatever your business is doing in whatever city you're in. And so this led to the colonists thinking, well, you know what? Since we're doing all the work, we have our hands in the soil. We're building this thing out of nothing. Why are we giving it to somebody in a whole ocean away? So let's take this thing. Right, and one thing they did, instead of just breaking away, Joe had mentioned it, the colonial scrip. It was in Pennsylvania. Benjamin Franklin was a part of this thing, and it worked great. Now it was fiat currency, and it could have been abused, but Joe, there was no central banking authority over it. These men made sure that it was an exchange so that people could get goods and services moved and build their economy. And the Bank of England, which ruled over England, said, no, wait a minute, you can't run a monetary system outside of our control. And they sent, hey, King George, would you send over a couple of ships full of this stuff, counterfeit script, and just destroy and inflate their currency till it's worthless? And after that happened, the colonists were like, well, if we can't have our own money system, we can't have monetary metal coins, we might as well just take it. We'll just take the whole thing. And that's when the Revolutionary War started, Joe. The War for Independence was based on money.
It was based on money, and it was based on fiat money. And the fact of the matter is that this is why our founding fathers were like, okay, we got to make sure that doesn't happen to us. Right? We don't want to have a system where that could happen again, and that's why they wanted the money to be gold and silver. And think about it. A $5 Liberty or a $10 Liberty, a $20 Liberty, all the way through the St. Gaudens in the Indians for 100 years. A $20 gold piece bought the exact same thing. Think about it. In 1866, $20 bought you, a cow, a whole cow, for $20. Well, guess what? In 1933, until they took the gold away from us, and every year in between, $20 would buy you that cow. And that's incredible, because we know today nothing costs the same as it did, heck, last year, 5 years, 10 years, right? We have a central bank that tells us, oh, well, we target 2% inflation. And most people don't even know what that means. That means, hey, we want your money to buy 2% less every single year. And, of course, here's the problem. Right now, they admit that it's buying 8 or 9% less. But we know it's buying 20% less. And that's really, Jason, it's theft. And this is exactly what our founding fathers rebelled against England for, because that's what England essentially was doing to the colonists. And Jason, it's playing out again.
That's correct. After the War for Independence ended, Joe, it's interesting. I think that war would have continued on, or would have been restarted quickly, hadn't the loyalists in the colonies were able to get a central bank shortly put into place right after the Constitution. So here you have this brand new country. You always wonder why did England win the war, or they had wars, they had property all over the country. They were expanding, right? they could have put enough troops in America and owned this place, but it's better just for them to just give it to you. And so when our country started, we had a central bank, the first bank of the United States. And all of the confrontations in our country's early history have to do about banking and central banking. In 1811, by one vote, the Congress was like, hey, this central bank that we put in place in 1791, this isn't working out. But by one single vote, they got rid of the central bank. The Bank of England threatens, like, look, if you do not put our bank back in place, you don't put your central bank back in place, there'll be war. If you ever wonder why it was the War of 1812 and not the War of 1820 or the War of 1809, well, it was the War of 1812 because the central bank got voted out. And did we win that war too? Not really, Joe. What happened is like Joe said, in war you build debt. And to win the war, you'll do anything you can. Well, they had this huge debt. Why did the British leave us in 1815? Well, we, in 1816, started another central bank, the second bank of the United States, another 20-year charter. You know, when Andrew Jackson got rid of that bank in 1835, the country was very prosperous. The bankers were frustrated. Guys like Andrew Jackson and others that pushed hard made it very difficult for them to own the asset. Because let's face it, all this is about owning the entire assets of this new country. That's all it is, Joe. They want everything. So,
and I think about today, just as an example, 0.5% own 90% of the assets. That's today. This is exactly what our founding fathers were trying to prevent.
Yes. And Joe mentioned the Civil War. There was inflation, and we didn't have a central bank. Okay, and usually inflation actually does involve central banks. Believe it or not. I mean, with a gold money system, you shouldn't have any inflation. Well, we had gold in 1861, 1862, 1863, and here came this inflation. Well, Abraham Lincoln, you know, this is stuff they don't tell you in the history books. Well, there was British soldiers amassing in the Canadian areas, and there was French troops starting to amass in Central America. And they were waiting for this civil war, which was being pushed and stroked by the bankers to get going, because they knew they were going to jump on some new colonies. They're going to recolonize as soon as this place tears itself apart, or they're going to get their central bank back. Well, Abraham Lincoln stuck between a rock and a hard place. He actually had to break constitutional rules because he felt like if he didn't, there'd be no country. In his mind, it was either break constitutional law and have a country, or don't break the constitutional rules and there may not be an America. So what he did is he was going to fight this war against the South and keep the country together. The South should have been allowed to secede, by the way. However, with the situation the way it was, he went to the banks and he's like, hey, I need some war. I need some money for this war. We're going to keep this country together. It's the only way. And they said, Abraham Lincoln, you know what? We're going to help you out. 37% interest, war loans. And Abraham Lincoln went back to the Capitol. He's like, man, he was depressed. He's like, I know what 37% interest means. It means another central bank. So he did something, which, believe it or not, Joe, if we did this today, it would be good. We have a fiat currency, but the problem is our fiat currency, we have to pay interest because we borrow it into existence. He just printed the money through the Treasury. Now, it's still fiat currency. If you have the wrong president or you have the wrong Congress in place, you can definitely have inflation and destroy the economy. But he didn't have to pay any interest to any bank or any independent corporation. And it worked so well that they were making songs about the greenbacks, about how great it worked. And I'm sure, Joe, if he when he was reelected, if he didn't get assassinated by the bankers, he probably would have brought gold and the greenbacks into balance and had both of those things together. So, but the inflation went away, Joe, because the bankers were incensed by this. They actually started contracting the currency so badly from the 1860s to the end of the 1800s. There was all kinds of depressions and market crashes that went all the way to the 1907 crash, Joe. They just caused economic strife because they still were the richest guys on the block, Joe. And it's if you just stick to a gold-only money system, things will stay just fine. And I guess we allowed things to go the wrong way in 1913.
Yeah, and again, it just leads to, think about 1835 to 1913. There was no central bank in this country, and you didn't have what we're seeing today. And the problem is what we're seeing today, what makes it so much worse is the amount of debt that we now have to pay. Abraham Lincoln thinking about 37% interest. And I'm like, man, I know what that means. And, of course, we were talking about very, very, at least in today's terms, very small amounts of money. Now we're sitting here talking about, B of A, the CEO of B of A says, okay, our best case scenario is a Fed funds rate that's 5%. Paying 5% interest on $40 trillion, and let's face it, growing rapidly, that's a huge burden. But the problem is, I don't think it's going to be 5%. It's going to be 7%, maybe 8%. Who knows? Could be worse than that. And Jason, all of a sudden, you start drowning in that debt, very much like the colonists. Yep. Were drowning when England came up with all that script to flood the markets.
That's right, Joe. The founding fathers, for as intelligent as those guys were, I'll bet a lot of them didn't even know what the word trillion was. I'm serious. I don't think these guys knew what trillion was. That number didn't really even exist. It didn't need to. Because what you said, Joe, $20 was $20, right? There was no inflation if you had a gold-backed money system.
Patriot Radio News Hour. We'll be back after the break. 800-951-0592. And, it's not just here, right? All the other nations and part of what they've done, because, fiat money's a Ponzi scheme. That's how it's designed. It's actually set up to always go to zero. Because, the only answer to every problem is print more of it, print more of it, print more of it. And then eventually when you print so much of it, nobody wants it anymore and it becomes worthless. And Jason, we're seeing this play out. Obviously we talked a lot about Japan, the UK. We just heard from, you know what? And now I'm drawing a blank here. The Swiss bank that's been having all the Credit Suisse.
Oh yeah,
Credit Suisse came out yesterday with earnings. They acknowledged they had a full-blown bank run, and it wasn't a bank run where depositors were coming and taking out their money. It was other financial institutions taking out their money, and they broke liquidity requirements, all these things that they said they put in to help us. Yeah, believe me, it's only there to help until it no longer makes sense for the banks to do it, and that's kind of what's been happening. But this is why you're hearing a lot of talk about when the digital currencies come in, that there's going to be a need to have that currency at least backed partially by something. And people speculate, the Saudis, the Middle East may have one that's backed by oil, or China and the United States in particular, they may decide to back it with gold, where Russia may decide to back it with energy, things of that nature. They call it Bretton Woods 3. But again, I think this is part of the reason when we're talking about what's happening in the markets. You got paper markets, you got physical markets, and Jason, a lot of people out there that really understand what sound money is are buying up all the physical assets of things, and namely, obviously, gold and silver.
Right, and when you talk paper markets, Joe, and when you hear that, it's not a bad thing. What it means is what does that piece of paper actually give you? It has to be some sort of an agreement that you're comfortable with, which means, hey, Walmart, I bought Walmart stock. Well, when you buy Walmart stock, there's a company. There's a company, and you're betting that, hey, this company's going to grow, it's going to do better. This is a good place to have my money. Unfortunately, the reason why paper is so bad and why I don't get into it myself almost at all is, now you're buying stock on Walmart. We all know Walmart's going to grow. You would think that's going to be a good bet. But the government and this central bank, these corporations, are telling the government what to do, and it's making it fraudulent. Is Walmart getting bigger because of its hard work and its ingenuity, or is it being propped up? And if it's being propped up, Joe, that means it can be taken down. It's not, betting on companies through paper markets is so difficult nowadays. Joe, you go back 100 years or more, when you buy into a company and you have stock in the company, there was a deal there. It was good. It was a good partnership. But they've messed it up so bad with all of this printing of money, and the inflation that inherently happens since 1913, Joe. It's just inflation's just gone on and on and on and on, and it enriches one class of people, Joe, at the cost of everybody else, Joe.
Yeah, I mean, again, I'll go back to how can you have a 0.5%, especially when you think about the amount of money that's been created, and yet 0.5% of the population owns over 90% of the assets. That's America today. And most people, if you tell them that, they don't want to believe it. They're like, oh, no, that can't be right. No, that's exactly what it is. And by and large, as we talk about, the reason why is it now that 63% of people are living paycheck to paycheck? And when you think about the history of this country, that's right at an all-time record high. The highest it's ever been was 64%. And we're right back there again. And think about this. Over 50% of the people making $100,000 are living paycheck to paycheck. When they took the gold away from us in 1933, that's when they created the FDIC. Most people don't know that, right? Because they wanted to say, hey, don't worry. If we screw it up again, we're going to protect the money that's in your bank so you don't lose it all. Do you know what the first FDIC insurance number was? Because right now it's $250,000, which is ridiculous because they don't even have anywhere close to that kind of money. It was $1,000. $1,000. And now we're talking about people making $100,000 a year having to live paycheck to paycheck. And that's really what fiat money's designed to do, Jason.
Joe, I don't know if the FDIC could even guarantee everybody $1,000 if things went wrong. Could they actually cover $1,000 per account? I don't know if they could even cover that, like today.
Well, they've got about $130 billion. So I don't know how many bank accounts we have. It'd be close.
It'd be close. Yeah, if 100 million people's bank accounts closed, that you could maybe cover that $1,000 because that amount of money might do it. Just might do it. But of course, they're guaranteeing $250,000. That's impossible.
Yeah, and exactly, it just doesn't exist. But again, nobody's going to tell you that.
No.
Right, because you don't need to know that. And think about when they did it. So in the financial crisis, it was 100,000. Well, guess what? People were starting to pull their money out. And again, I'm telling everybody right now, you better be careful about what money's in the bank, because the next time they come for it, it's not going to matter. That $250,000 is not going to matter. That's going to be irrelevant. They're going to tell you how much of that hard-earned money you have in the bank you get to keep. Rest assured, that's what those IRS agents are for. And they've got it all set up. Dodd-Frank, they changed all the laws. They really have us holding the bag here. When we get back, we're going to go over one of the options, a precious metals IRA, for you to consider. We'll be right back. 800-951-0592. And again, we know this. The higher these rates go, the bigger chance that they break the system. And again, it doesn't matter where it breaks, whether it breaks in Japan, whether it breaks in Switzerland, the UK, Europe, China. It doesn't matter. Because all of these banks the banks that matter, here in the United States, there's only like 10 banks that matter. Really. Seriously. And 10 may be an exaggeration. It may be like 6. But the problem is these are all global banks. They're all intertwined together. Credit Suisse had to announce yesterday that they were essentially on the brink of insolvency. And again, we'll find out about it in a couple of years. They got bailed out. They were done. Okay, they were done. And the problem now is, as we were talking about, the amount of debt globally that has to be financed. And you got to remember, they had rates at 0 for almost 15 years. And the debt went from 10 trillion to 30 trillion. Not to mention the Fed's balance sheet went from less than 1 trillion to 9 trillion. That's just here. Not to mention how much the unfunded liabilities rose. Not to mention all the debts of all these other countries. I mean, look at the UK as a great example. They couldn't even do a bailout package without root. They're like, oh, you can't do that. Nope. You got to take no tax. You can't give out tax cuts. You can't pay people's power bill. You can't do it. And the system, by design, this is what it's supposed to do. This is why I say, when Jason says, hey, listen, this is all done on purpose, right? They know what they're doing. Truly, they do know this. All fiat money goes to 0. They've been creating fiat money since like the 1200s. None of it exists today. I mean, except the modern versions of things. And this one's coming to an end.
Joe, let me jump in real quick there. Just for a moment, let me jump in, because you said it many times, even before I got on the air with you in 2018, that and I just saw a thing on TV that talked about how the Depression was 1929 to 1939. It came to an end before World War II. But how many times have you said, Joe, that the World War II is really kind of the end of the Depression, right? Now, just as one last little piece of history, because we're going to talk about IRAs. Joe's moving into IRAs. It's an interesting fact that people need to understand, that the Depression didn't end until World War II. And then think about this. The world system, which wasn't a full world system, Hitler was Time Magazine's Man of the Year in the 1930s for rescuing the economy of his country. And it wasn't Hitler, but he was given credit, the guy in charge. And what he simply did is he went to a fiat currency. He stopped paying the Versailles treaties to the European nations, and he went to an interest-free, debt-free currency. And Joe, just think about that. That was going to break the world economy so badly, and Germany was doing really well with this. And this isn't about how great the Nazis are. This is about somebody wanting to break out of the system that was broken, so badly broken, and then World War II cleaned the whole system out. It took a World War II to solidify the bankers' situation worldwide and get what they want. That's what it took. It took World War II, Joe, and World War I, you could couple that in, to fix it. That's how bad it was. We are at that point now. We are at the point of World War II. Now, I don't know if we're going to have a world war, but our economic system worldwide is more entrenched. It's worse than it's ever been, Joe. And it's something's going to happen. Something has to happen. It's completely broken.
Yep. It's broken. And there's no coming back. They have no intentions of paying off this debt. What they do intend to do is to use the money that's in your bank account to do it. That's the plan. If you don't believe me, go read Dodd-Frank for yourself. Well, you probably won't even be able to understand it. So let me just tell you the long and short of how they fixed too big to fail. They didn't make them smaller. They made the banks bigger. The exact opposite, right? Too big to fail, make them smaller. No, they made them bigger. And then they rewrote the language to let it be known what they can do at any moment in time. It doesn't matter if it's your 401k, your IRA, your E-Trade account, whether it's Schwab or whoever, doesn't matter. Any of your trading at home accounts, your money market accounts, all the money that's in your bank, all of that can be frozen immediately. That's what the language says. When we deem it to be an emergency, you're not going to be allowed to sell. Right? Remember, how did Bernie Madoff get caught? Do you know why Bernie Madoff got caught? Because of the crash, and people wanted to sell. Hey, you know what? I don't trust Wall Street anymore. I want to sell. That's the only reason he got caught. The reason they put that language in there, Jason, is because this is truly a Ponzi scheme. And if there's no new money coming in and everyone's taking money out, the system collapses. So their plan is to make sure it collapses on you. That is the plan. That is why I tell you, don't have all your money sitting in those banks. It's not safe. Right? And obviously, we got to have money in Wall Street. You got to have 401ks. If you got any chance, you got to be smart about it. But having some money in gold and silver, that is so key. Because that's the one asset that's going to perform for you. And a lot of people don't even know we've got precious metals IRAs that we do here at Patriot. We do them all day long. In this last segment, I'll take a few minutes to just tell you how it works so you can understand it better. Final segment coming up. 800-951-0592, Patriot Radio News Hour. And a lot of people out there, hey, that's where most of their money is. Hey, I don't have a lot of money in my bank account. My money's in IRAs, or it's in old 401ks or what have you. And you can set up a precious metals IRA with us. It's an easy process. And I say easy, it takes time, and you got to do some paperwork, and you got to make a few phone calls. But the minimum is $5,000. That's the least amount that you can use to start a precious metals IRA. You can roll over any old 401ks that you had with previous employers, any current IRAs or things like that, and it works just like all of those same instruments. The only difference is instead of buying stock, you actually procure hard assets, gold and silver. Now, you don't get to have it at your house. The metals will get stored at the depository. There's 2 depositories to choose from. There's one in Delaware, and there's another one in Texas. You can store it at either. You have the option. You pick where you want it to be stored. There's a small setup fee. The whole thing can be done for under $500. And the great part is there's no fees with it. So unlike these IRAs and stuff that you have everywhere where they charge you 1 or 2 or 3 or 4% with fees and all this other stuff, all as you do is once a year you got to pay a storage fee. That storage fee, it's like $100. That's it. That's the only fees involved. It works just like any other IRA. If you need some money and you want to sell, you just call us up. You fill out some paperwork. It gets done. If you decide, you know what, I want to store I want the gold and silver that's in my IRA at my house, you can do that. It would be just like you liquidating your IRA, but you could do that gradually. You could do it all at once. You have all the matter of fact, you probably have a few more options in accessing your money with a hard assets IRA, Jason.
Yeah, it's great. And Joe's been handling these for a long time. I don't handle these in Colorado, so that you would definitely call the 800 number.
Yep. Arlene is our IRA expert. I know a lot of you customers have talked to Arlene. She is awesome. She handles all of our IRAs. We use a company called Gold Star Trust, and she'll help you. She'll tell you all the things that you need to look out for, all the things that you need to do. She'll be there every step of the way for you. And it really is a good idea. Maybe you got, like for me, like I use my son. My son's my financial advisor, and I'm going to have several different buckets of money that I'm going to have access to when I retire. Well, it's a really good idea. Maybe you take one of those buckets and you put it in some hard assets, because you know when this collapse happens, they're going to lock you out, because that's what the rules say. It's an emergency. Sorry, you can't have access. And again, you don't have to roll the whole thing over. If you got an IRA with, say you got $500,000 in an IRA, you can roll 100,000 over. You can roll 50,000 over. You can roll 200,000 over. You have all of these options available. If you want to learn more about it, call and ask for Arlene, 800-951-0592.